Hi, everybody, and welcome to another installment of Thursday Thoughts. I'm Alex Leonida, the CIO of Capital Financial Group. I know most weeks we wait till the end, but this week we're going to start early. It is supposed to be a happy hour, or half hour at least. So I'm going to sip on some Woodford Reserve in honor of my brother Cole today, one of his favorites, because he does a lot of the back end work on these videos. Just want to let you guys know all that. It's good to be live again. Last week we tried a pre-recorded version of this. Although the video worked just fine, it wasn't as much fun for me personally. So here we are again, live, coming at you. Thursdays, 4 o'clock. Love these videos. If you guys have any questions you want me to address in the coming weeks, or if you want me to tackle in a blog post upcoming, or if you just want to get in touch, shoot information or questions over to info@cfgfinancialplanning.com. And once again, if you guys have any interest in continuing to follow everything that we have going on here at CFG and our YouTube channel, make sure to like and subscribe to this video. Um, every single week we cover the same major topics. We're going to start with data points, and then we're going to move into big news stories. Then we got questions. Got a really good question from a client meeting this week, actually, that I'm going to address. And then we close with my favorite, which is the final thought. So without further ado, let's get rolling. We're going to start with our data points coming in hot, fresh off the presses this morning. We got the jobs data. Yep, still not looking super awesome. We're hoping this is going to improve. We have been hoping for quite a while with the prospects of the federal benefits going away. We've been talking about it for months now. What is going to happen when people stop getting these bonus checks, per se, from the government at the end of July? And honestly, it's not looking like a whole lot's going on. I mean, it's kind of one of those scenarios like we always say, hope is not an investment strategy, right? Well, it's apparently not particularly a good strategy when dealing with economic data either. The continuing claims are still elevated as well. We always talk about that DOL PDF, the one that kind of hides all the information under like gazillions of pages of blah, blah, blah. We are still sitting around 30 million total unemployed working age folks. And they only really captured the data of about 148 million people. So that is a big percentage, and it's not getting any better. We got Congress going nuts, fighting over all of this stuff right now. It looks like we're probably going to see some of this data actually go away. No, excuse me, not data. We're probably going to see some of these benefits actually go away when everybody figured at the very least they'd find a way to keep them going for a while. So we're going to have to see what happens next week. I mean, I think most folks were expecting to continue to get checks, and that's not going to happen based on where we stand right now. Another important data piece that Cole alluded to in the Monday Morning Minute this week is the GDP data. So when the blue line goes down real sharply, that's no bueno. We've been saying for a while that GDP was going to be kind of ugly in Q2, and here you go. That first leg down, kind of the not so steep one, was what we saw with the quarter ending in March. That only had a few weeks of coronavirus related activity, and then clearly it accelerated massively to the downside. We actually expect this to look quite a bit more like a V-shaped recovery in terms of this particular GDP chart, because the only way that it wouldn't look like a V is if the data was worse than this 32% downside again next quarter, and we certainly aren't predicting that. That would be crazy. So that's just not going to happen. More people are out shopping. More people are, I guess, essentially spending money on a regular basis. More people are getting out of their house again. So it's not going to look nearly this bad next quarter. So visually, that chart's going to look like a V. That doesn't mean that we're out of the woods or we think this is like a true bona fide V-shaped recovery. That's just the nature of the way the chart works. If it's not less bad, or excuse me, if it gets less bad and not more bad, then we're going to get a V. So simple as that. Pending home sales is the next data point this week. Pretty good stuff here. You guys are probably all like, oh, Alex only talks about sad stuff and it's really bad all the time. All the data is bad, but like this is good. This is good data. We don't see good data all that often, but this definitely is good. Okay. Um, Residential real estate continues to be the relative bright spot in the entire economy at this point. I mean, there's some spots in like groceries and supply chains for grocery stores, et cetera, that have been doing well. Some mobile doctor stuff has been working pretty well, but this has been by a wide margin one of the brightest spots in our economy. Um, what makes it even more impressive right now is the fact that we're seeing this incredible increase, still 16.5% month over month on pending home sales, in the face of incredible uncertainty, in the face of really bad employment data, a lot of fear about potential wage decreases in the future, and probably more than anything, and I think something that a lot of people aren't really thinking about is we're seeing this huge increase in pending home sales with mortgages being so much harder to qualify for. I mean, I'm going through the process right now. I mean, my financial house is pretty well in order, and they still ask you for a million things and question everything and look at everything through a microscope. And it's challenging. And if you don't have a crazy good credit score, they don't want to give you good rates. Um, but on the flip side, it's one of those scenarios where homes are more affordable on a relative basis than they have been in a really long time because mortgage rates are super duper low. So people that are renting in urban areas that are paying a gazillion dollars a month for rent, if they don't have to stay there for the long term because they can work from home or whatever, they may move out of big cities potentially. They may find it to be a little more attractive to be putting their money into a home that they own as opposed to just perpetually renting, especially with some of these mortgage products out there that don't require a 20% down payment. So there's a lot of things that go into this, but any way you slice it, it is a good thing that we're seeing real estate data is as good as it's been lately. Um, Big news is next on the list. Every single time we do this Thursday Thoughts, we talk about coronavirus. I'll tell you what, this thing just won't go away. Look at this. Top line, same time same thing every week, right? Cases per day. Yucky. 69,189 cases yesterday. That's I don't even know what to say about that. What I can say though is I don't wanna get too ahead of myself, but we are making lower highs. If you look at those last three peaks, 3 peaks ago, not weeks, 3 peaks ago was our highest daily count, and it's been slowly declining. Remember, lower highs in this case are a good thing. Next on the list, we have current hospitalizations in COVID. The numbers elevated, but on a relative basis compared to how many people actually have the virus, it's a lower number. So that's a positive. We're also seeing that in a big way in deaths per day. Granted, there's a lag period. We've talked about this 2 to 4 weeks before people actually die. But even if this number goes up quite a bit, it's still going to be way below the highs we saw in April and in May in terms of deaths per case, right? So those are all good things, relatively speaking, right? It's not actually good, just good on a relative basis. Um, so it makes us at least hopeful that we could be turning a corner here. Next up on the list, I mean, I can't get away from this political stuff right now. There's no way to get away from it. It's all over the place. It's in our face. Now it's affecting our everyday lives. We have the Republicans hitting us with a super exciting stimulus bill. I use the term exciting relatively loosely because there's no way it's going to get passed. We're popping this picture up because this is about how these two folks feel about each other, and they're probably talking about the coronavirus bill right when this picture was taken, I would guess. In any event, this bill that was just passed through the Senate and apparently has the stamp of approval from the president. I don't really know. It's supposed to supplement the $3 trillion package, the CARES Act that we got earlier in the year. The plan is pretty comprehensive, but it's not quite as helicoptery as the Democrat plan was from a few weeks ago, the one that we talked about There was another $3 trillion, basically unemployment benefits going into perpetuity at massive amounts, huge socialist state ideas. We knew that wasn't going to work. Now, on this side, we have the Republicans that are essentially saying they're willing to expand unemployment benefits for a longer period of time, but only up to a maximum 70% of pre-virus salary or pre-filing salary, which seems a little more reasonable, I guess, on the surface, because people should make a lot more money when they're unemployed than when they were employed. Um, but it's one of those things that kind of disproportionately affects the lower income people who were already living paycheck to paycheck, and they need that 100% of their income just to put food on the table and make rent and all that. So there's a lot of moving parts, but this is kind of like, I don't know, bartering for something in a foreign country, right? They always start with an asking price that's way too high, and then you come back with something that's way too low, and you're gonna find some sort of middle ground, hopefully. It's just they're so far apart right now. It's comical. I have no idea what's going to happen. A couple other little points that are in this that are probably useful to know is they Republicans are offering another $1,200 stimulus check being sent directly to people. They're offering for healthcare support costs related to COVID. They're offering, I guess, some protections against COVID-related lawsuits on businesses, which seems like it kind of makes sense right now. The only problem with that, of course, I guess the naysayers would be out there crying that it kind of, I don't know, encourages businesses not to follow proper social distancing or healthcare guidelines. So I don't know. It's going to be really hard for them to try to figure that out. Last thing on the list, which I didn't know about at all and I wasn't really expecting, was about 100 billion earmarked for education spending. That's K through 12. About 70 billion, and then about 30 billion for higher education, like public universities, is all going to find ways to improve distance learning, improve technology. Um, but I don't know. We'll see, right? I mean, I feel like it's the only phrase that I can use when it comes to this because it is so impossible to figure out what these people are actually doing behind closed doors. And what they release to the public is totally nuts and never going to actually get through on the first try. So that's what I got. I don't know. Next up on the list is Biden's economic plan. More political stuff, but probably important to know what's actually going on because, frankly, Joe hasn't said a whole lot in terms of policy, right? So here's a brief synopsis of kind of what's going on with this Build Back Better plan. Um, I don't particularly find this to be catchy, but whatever, it's cool. So we got serious tax hikes coming for all of the highest earners, and also pretty substantial tax hikes for businesses of all sizes. It doesn't matter if you're a multi-billion-dollar corporation or if you're a mom and pop shop. Corporate taxes are going to go up with this plan up to about 28%. They're currently at 22, which makes us much more competitive on a relative basis with the rest of the world. 28 would be on the high, the high end again. Excuse me. Probably need a little bit of this bourbon here. Um, Another really important one that's going to affect a lot of people is taxes on investment income of over $1 million is going to be taxed at your marginal rate, not the capital gains rate. Hmm? So I realize most people don't make over $1 million of investment income, but there's a lot of people that do, and this is gonna make for some interesting tax planning and investment strategy. So that'll be kind of weird seeing how that plays out. Uh, Ultimately, the breakdown is the goal of these taxes is to raise about, I don't know, plus or minus $4 trillion over the next 10 years, which seems like a ton of money. Probably seems like a good idea considering how we blew up the budget over the last 4 or 5 months. But on the flip side, he's saying that he wants to spend somewhere in the range of 7 trillion over that same 10 years on some infrastructure plans, eco-friendly green initiatives, et cetera, that he claims is going to really encourage growth in the economy. So, two sides to that thing. It's gonna blow up our deficit, but if it does in fact create incredible growth, then who cares, right? I don't really know, but what I do know is that this plan is so comically far away from where Trump's plan is, that our three debates, that's all we get this year, are going to be awesome TV to watch. So make sure not to miss those, especially if you're a registered voter, and if you're not, you should be. All right, question of the day. Once again, if you got questions, you can always shoot them to info@cfgfinancialplanning.com. This question, as I alluded to earlier, comes from a longtime client. This couple is awesome, very astute, um, very thoughtful in the questions that they throw out there, and I enjoyed answering this question when we had our review. Their question was, should we be worried about U.S. government debt, and how will this excuse me, Freudian slip there, affect our investment strategy? All right, so I'm going to make this as simple as possible, trying to answer this, because ultimately this is just an opinion and not a definitive answer for all economic thought out there. I guess that's like most things at this point, but our GDP, or excuse me, our debt to GDP ratio is super high. It's getting to the point kind of where it was back during like World War II, for example. So extremely high, and on the surface it would seem unmanageable. But, and this is a big but, borrowing costs have never been even close to as low as they are right now. I mean, this is brought on by the Fed's money printing, which everybody always talks about. Essentially, what's happening is the Fed is buying treasuries from the Treasury to create cash that inflows into the economy, that weakens the dollar, makes cash easier to come by, et cetera, blah, blah, blah. Bottom line is, though, the 10-year Treasury rate trading at 0.5, whatever it is today, and then 30 years being out there at like 2%, we can borrow a ton of money and have very, very, very small debt service payments. Okay, so that's why this is not an immediate or even really an intermediate term crisis. This is a long-term crisis if rates go up substantially as a result of a bunch of inflation, which if you watch some of the other videos, yes, I'm concerned about inflation, not necessarily to the point where it's brutal, they're going to have to raise rates to fix it. But the only way you deal with inflation is raising rates, really. So we're going to have to see how this whole thing plays out. It's going to be a tough balancing act for the Federal Reserve to keep things under control. Um, but I would say, I mean, our average client's somewhere in their 60s, I would guess at this point, and realistically, they're not going to have to deal with it during their investor life cycle. It's just not something that's going to be a concern because we have this enormous amount of debt expiring 15, 20, 30 years out. And it's all very easily serviced right now. The question is what's going to happen when all of that debt comes due. All right. Somebody's going to have to pay the piper, but most of our clients won't see the day of reckoning. And on the second part of the question, realistically, we won't have to do a whole heck of a lot with high quality risk managed portfolios because they're already designed to weather different economic environments. All right, guys, time for my final thought. I'm gonna take a sip for this as well. Stuff's good, Cole. I like it. I'm normally a Scotch guy, but not too bad for bourbon. All right, so last week I realized I probably irritated a few people with the whole mask discussion, and I'm gonna try not to tick off anybody this week. For the record, it is tough to get a point across, stay in compliance, satisfy my primal urge to make my opinion heard, and then also not irritate anyone. So I got a lot of bases to cover there, and I do the best I can every week. So apologies if the whole mask thing bothered you. I digress. This week, my final thought has to do with, excuse me, adaptability. Okay. I could take this a gazillion different directions, but I'm a big history guy, and history would suggest that humans are by a wide margin the most adaptable species on Earth. Or, this is a big caveat, we have the innate ability to force our environment to adapt to us, right? So we craft the world we live in. This is good and bad, depending on who you're talking to, but nonetheless, it is true. We as humans, we find a way to survive. and in vast majority of cases, not only survive but thrive um, on this earth that we have. The thing that gets me is people that get so incredibly caught up in the moment and the drama of the day, whether it be the virus scenario or all of these protests or what someone just tweeted or what people didn't liked or didn't like on your Facebook or whatever. These people are missing the point of what it is to be human in challenging times, right? We problem solve. That's what we do. We adapt. That is what we do. And we grow together as community and as a country when we're pushed to the limit. Um, I mean, it seems like we're growing apart, but I would argue that we can grow together through this whole process because we're humans and that's what we do when times get tough. Okay. There's a reason why I use the collective we in all of these statements. It's because we are Americans, right? And we stand together. That's what we do. Um, I forgot to change that page. Don't want to lose my train of thought. But no, that's what we do as Americans, right? And I'm a big econ history guy. And from my perspective, things haven't really gotten that tough yet. Okay, I mean we're currently on the longest active streak without a world war, which is pretty amazing to be able to say that a lot of people haven't seen a world war in their entire lifetime. I mean, that's amazing, right? We're on we're on a streak of continuing unprecedented global growth, which I mean, I know it seems like it's fragile and it's falling apart, but I mean, the economy in this world that we live in has brought so many people out of poverty. It's mind blowing. I know that's still not enough. I know there's still people that are struggling, but the bottom line is we are growing, right? We're growing together as humans, and us in America, this country is growing through tough times and through good times. And it is what it is. And my goal, my thought process is why don't we just get back to the basics? Be a little bit more introspective and be thankful for what we have and more importantly what we can give, right? Let's be thankful for what we can give and what we can do for our neighbors. And more than anything else, honestly, let's be thankful for the country we live in. All right? That's all I got for this week. I love doing these videos. I appreciate you guys joining me today. Um, it's an honor to be able to share my thoughts, spread a little knowledge. Hopefully, you guys get something out of it. Don't forget to like and subscribe. And right here, doop, doop, like and subscribe so you don't miss any of our content. We're going to continue to put out quality content that's hopefully educating and entertaining. If you guys love this stuff and you guys want more of me, shoot information over to or shoot a request over to info@cfgfinancialplanning.com. Let me know what you guys want to see more of. We're going to revamp some of our content over the coming weeks and months. Not only how we do it, but how we deliver it. And we want to make sure it checks all the boxes for our clients and our viewers alike. Um, Personally, I love these Thursday thoughts, but we're going to kind of rethink how we handle this stuff. And we're going to take a few weeks off, trying to figure out the best way to deliver this information to you guys so it is the most useful and the most enjoyable use of your time. So until that, thank you guys so much for watching. Cheers. Have a great long weekend if you take Fridays off. If not, have a great weekend and a day. Take care, guys.